Welcome, everyone, to another episode of the podcast and YouTube show, None of Our Businesses. With me this week is Charlie Zigmund.
Hi, everybody.
And Jack DiMatteo.
Welcome.
Hey, what are we going to do today? Well, we've got multiple articles to talk about. Before I go through that, I just want to say if you have any questions, comments, suggestions for us, please put them down in the comments section if you're watching the YouTube video. And also, give us a thumbs up, subscribe, give us some likes. You wouldn't believe how much that can help in terms of getting what we're doing out to the rest of the community and building our audience, which is something we would love to do. So if you like what we're doing, we would love for you to share it with other folks and also help us with those metrics. All right, so what are we talking about? Well, control testing app for auditors. This is an accounting thing. Will it save auditors time and provide more value to clients? Coastal areas. Why do we keep rebuilding these coastal areas? Sent to us from friend of the firm, Brian Kuo, the story behind Initialize, the VC firm, and its founder, Gary Tan. Are VC-backed startups like memes? And finally, we are so much flush with cash and we have pent up demand. Does that mean inflation is coming? All right, well, let's get into the show, starting with Charlie.
All right, everybody. So I've got an article we can talk about today from Accounting Today. It's called Grand Thornton Releases Controls Testing App. And so what's going on is that Grand Thornton, the accounting firm and audit firm, has released a proprietary app for automated controls testing targeted at auditors. It's called CTA.X, and it's basically designed to help make all of these processes that auditors were doing in a manual way be more app integrated, be cloud-based, roll up to dashboards, and allow for clients to see the results of these types of tests that are being ran on their business and that sort of thing. And so basically, it's just one of these ways in which an accounting firm is trying to use technology to kind of improve its processes. And one of the things I thought was interesting about it is that it came out of a system they call ALIX, which is a place where businesses can go and post business problems and get advice from subject matter experts and accounting technologists and all these sort of different things. And it's one of a couple of different companies that have come out of that platform. And so I thought it was interesting because it seemed like internal controls is a good candidate for this type of automation because there's a lot of repetitive work in it. And I wondered if maybe you guys could think of some other areas in accounting that might be good candidates for this type of app, or that, or for improvements to the process that, cloud-based technology can help provide.
Well, the three-way match always comes to mind. I mean, three-way matches, variances. I think that's where a lot of these things that are transactional and repetitive, and you can easily set parameters for. I think they lend themselves to these types of apps because I think you want to automate things. I mean, we've talked about very recently on this show, as a matter of fact, how automation is going to remove all these accounting jobs. And within the last couple of years, I've seen things where, it'll be a bunch of automated processes and a CFO who's just reviewing everything. So I think, the finance area to where you can kind of program things and set parameters and get it to where it's going to bring things to your attention where you have the variances. Like right off the bat, I think of a three-way match. You have a variance over a certain tolerance. That would be something that I think you want to get people out of these things where they're just reviewing mundane transactions, and you want them, the ones that pass all the hurdles, the preset hurdles, those can go through, but you want them kind of really managing and looking at all the exceptions and focusing their time on that.
So, I mean, this technology, building off kind of what you described, Charlie, and then kind of Jack's follow-up on it, it sounds like this technology is really ripe for automated matching of things, right? That's the nature of it. I think that to the extent that I could foresee, and I know there's technology out there right now that is basically designed to check on how other technology works or how other technology was implemented. So I think, for example, like in the tax world, some of the automated technology that is being deployed and that has been worked on is automatic reading of documents and then using that to populate tax returns type of thing, right? So what would be interesting is if there could be an actual app that actually a secondary app that runs a check on that, right? That's able to make those comparisons between here's what shows up in tax returns versus here's what's in source documents, and basically is auditing. So you have apps auditing apps, right? And I think that's I think we might see more of that kind of thing along these lines.
Yeah, I agree completely. And I think it'll be exciting to see as we can kind of just limit the work to the more interesting things, kind of how that changes accounting and how that changes the focus. So yeah, it'll be exciting. Do you have another article we can talk about, Jack?
Yeah, I found this one. This one's kind of one of those ones I've always questioned why, we keep rebuilding, communities in flood zones and high risk coastal areas. Well, this article kind of talks about, maybe managing the fact that a lot of these coastal areas, over time, they're going to go away one way or the other. I mean, the one I always point out is New Orleans, the fact that it's, in Hurricane Alley and it's below sea level. It doesn't really have that long of a shelf life, and we continue to rebuild it after all these tragic events. And kind of they were talking about that in the article where, should the government get involved with kind of managing the decline of these areas? So, I know a lot of times, I've always heard it said that there's certain areas of California where you can't get insurance, depending on what fault line you're on. I know there's places in Florida that get pummeled by hurricanes. You can't necessarily get insurance on them. So if you've got the deep enough pockets to be able to afford a home and watch it go away without getting it insured, because a lot of times you can't get houses in these areas insured. So, kind of the article talks about, should this be something that maybe the federal government gets involved in? And basically they'll take over the management and the risk of a lot of these properties and a lot of these trouble zones. And, should something come, I guess there'll be a landlord, you'll pay them rent, but as these decline, they're going to bear the burden of the risk if they get wiped out. If that area becomes completely inhabitable and that community goes away, ultimately it'll be the federal government stopping that. But I kind of look at it as another way. It's very interesting. Being a lifelong Clevelander, they always talk about developing the waterfront along Lake Erie here, and we've had an airport that is hogging the primest of prime real estate on that lake, and they've talked about developing it for years. But here, I heard it when I was a kid, and here I am a few years older, and I'm still hearing it. And I guess it's a horrible location for an airport because of the crosswinds. It's tough to land planes in there, so it's not really a commercial airport. You have a lot of private planes will come in and out of there. Corporate, private jets will land there, but it's not. We've got a bigger airport away from the lake, and it's just, this would be something you would think the community should go. Should be able to wipe that out and develop that, but and this is something that wouldn't go away over time. But when it comes to these coastal regions, I know a lot of communities along the Mississippi River are other prime candidates. Every time we get those horrific floods, you'll see, the same cities along the Mississippi River get wiped out, and, we're back to rebuilding them. So it's kind of an interesting perspective. I guess at some point in time, you have to realize the fact that, maybe it's not the best idea to keep building up to the banks of some of these locations, and understanding that over time, just with some of the rising and changing sea levels, they're going to go away anyway. So kind of wonder what you guys thought about the article.
Yeah, from a business standpoint and an investment standpoint, it may, I kind of wonder how the dynamic of these areas being transitory, being temporary in nature, is built into their valuations, right? Because you were talking about the fact that they can't be insured, but I think it's like if in a perfect scenario, if in a perfect pricing scenario, it's built into the valuations. I mean, that's amazing to think about at the sense of, we know that coastal front property in prime areas like California are very expensive as is. And if you consider that theoretically that price should have the fact that it's actually not a permanent structure built into it as well, I mean, it's even more amazing. The expense of it is even more amazing, as an investment. And I think from if you're looking at it as an investor, or a business person, it's like, yeah, what is the rationale behind that investment if it is just, temporary or transitory? And I think it's you are somewhat you probably, from a business standpoint, are arbitraging the price versus your outlook of when the next disaster, flood, perhaps the great earthquake or whatever it is that would get rid of that property or destroy the use of that property as being something you actually have value for. So yeah, I think that's an interesting thing to think about, of how does the market bring that into consideration? Is it bringing it into consideration at all? And if it is, how is it bringing it into consideration?
Yeah, I think that's exactly right, and it's just really interesting to think about that thought process of how risky is it to buy something in a dangerous zone has to be repeated each time. So even if, in theory, the person selling the property thought about this and priced it in, every potential buyer has to consider that risk for themselves. And people have such a different risk appetite that I can imagine people coming to a much different conclusion on, especially something so improbable as the San Andreas Fault or whatever the other kind of natural disaster we're trying to project here is. So yeah, I think that's really interesting. And the other thing it makes me think about is just how land has never been our constrained resource, how there's so much unused space. So to build in this dangerous area feels really silly when something like, I think of Vegas, because if you look at Vegas without any buildings there, it's just barren desert wasteland that has no other use. And there's miles of that all around it. And so seems like you can take something, turn it into nothing, but then everybody still lives in all these dangerous places instead of doing that. So yeah, kind of interesting.
It's funny you mentioned that Charlie, because I was going to kind of deviate on that. That was another thing I think, local and federal governments of all types can kind of get involved with, like, managing this land and putting it to a better use. I know one of the articles I thought was interesting. We've got a lot of hulking cities here that had big infrastructures. Youngstown, Detroit comes to mind, and a lot of these communities. I mean, these like they said, I think it was at one time Youngstown had a population of 160,000. It was down to 80,000 and shrinking all the time. And they had literally, their city services would go to a street where one or two houses on the entire street would be occupied. So what they did was try to get people out of those houses. Actually, bulldoze literal whole streets of, outdated houses, turn that back into green space, kind of consolidate where people lived in the city. So, I mean, I guess as you look at this land management in these communities, nothing stands to change. There's the variables change, things are going to change. And it kind of makes more sense for them to get out ahead of that, have more green space for people to enjoy, and have it where, the city services are consolidated. Charlie, you have another article for us this week?
Yeah, I found one that actually our coworker Brian gave us an article we can look at from Forbes called "How Initialized Investor Gary Tan Turned a $300,000 Bet on Coinbase into a $680 million golden ticket." And so what it looks at is it's an article that starts off with an email between Gary Tan, who is the owner of the venture capital firm Initialized, or one of the owners of that firm, I should say. And he's getting an email from a person named Brian Armstrong, who had started up some internet company called BitBank, but basically told him that he has this idea for a Bitcoin company that he needs funding for. And it's going to be called Coinbase. And basically what ended up happening is that Gary Tan invested $300K into his business and became a fractional owner in it. And that firm, Coinbase, just went public this Wednesday. And so that amount has now grown to something just incredible. It looks like the ROI on it was 2,265 times over. He made his money back. And so I thought that was interesting just to see kind of the humble beginnings of it, just an email saying, "Hey, I've got this idea. I've been coding like crazy. Here's a link to what this project looks like. Do you think it's a good idea?" And kind of the feedback that he gave to him is that, hey, he didn't initially just say, "I'm ready to invest." He said, you should stop and look at those who work around you, because a lot of times the best partners are the ones that are already doing something else in that field. And so rather than come to me, you should consider those who you already work with. That might be a good option for it. And the article goes on to talk about just more about who this Gary Tan guy is. Apparently, he has a YouTube that's pretty popular, a Twitter that's pretty popular, and he's married to Serena Williams. So that's also pretty popular. And so basically, this guy's just got it all figured out, it looks like, and kind of want to get your guys' take. One of the things he said was that we've clearly learned over the last 10 years that every business is still a meme. And so he attributes a lot of his success to kind of the internet boosting things up like Dogecoin and these other virtual currencies. And so I want to get you guys' take on, is that a controversial opinion? Is every business still a meme, or is it actually something, that there was a lot more to that initial idea, and that's kind of an oversimplification of his success?
I'm trying to wrap my head around that statement and concept that every business is a meme. What do you think he meant by that?
I think what he means is that a lot of times a business's popularity doesn't come from the fundamentals that you might think it would come from. And so I think what he's trying to say is that the popularity of that currency among the internet culture of Bitcoin or of Dogecoin or of any of these kind of new startup ideas is really what drives its value. And that's a hard thing to put your finger on when compared to a lot of other businesses that have way more basic fundamentals like sales or number of customers and that kind of thing. And so I think he's just kind of speaking to the power of pop culture and of what he calls memes. And that's why I kind of hone in on it, is it seems like, is that a meme just because Bitcoin is popular on the internet? Or, so I think it's a little bit of a weird way to say it, but yeah.
Yeah, no, thank you. Yeah, because I think that's, and to me, that feels like a very Silicon Valley centric viewpoint as well, because it is this sensibility that, we're going to start companies, we're going to get them funded, and we're probably going to sell them off before they ever reach a stage of full product market fit and profitability anyway. And so the valuation during that time frame, during the life cycle that you're dealing with the company, as an initial investor like that, it isn't the goal. Profitability isn't the goal. Profitability is like this abstract concept that profitability has to be plausible so that someone way down the line would want to buy this in order to create valuation, for you today. But then he's turning that on his head and saying, well, the valuation is actually created by the popularity of it. It's, the actual tie into a business model that would be profitable is quite remote or abstracted from the business. And I think that's absolutely true in a lot of these businesses. I mean, I would 100% agree with that point. And I think it's okay. Like, I think you hear people talk about this phenomena that in Silicon Valley, you have all this investment going on where the business model profitability is questionable and it's based more on popularity or whatever. And that sounds to a business person, like somebody like me who works mainly with small businesses, that just sounds bad, right? But I would challenge myself on that point, that it's not necessarily bad in the sense that what is the popularity a proxy for? What does that actually mean? And I think that in these early stages, what these companies are doing is they're developing technologies. They're developing new service models. They're developing new kinds of product markets that, they're not well tested. So the actual profitability of them is unknown. But what you're investing in the early stage is the development of the technology, the development of the service model, the development of the idea. And then what you are selling is those things. You're selling the technology, the service model, the ideas. And that's what, as long as there's a buyer and there's people that are willing to buy that in the future, then so be it. And the actual connection to a profitability model doesn't have to be as direct or as important as you might think. I think, it's just, as long as everyone knows that's what they're doing, I think it becomes very confusing, because we think of all these things as businesses, but they're not all the same. They're not all operating businesses in that way. They may really just be technology development centers rather than actual businesses, right? They kind of have sales, they have customers, they have sales, they kind of look like a business, but in fact, what people are really investing in is the development of technology, and what they're really planning to sell is the technology. They're not banking on a customer base that drives a profitable business model when they sell it. And so I think it's an interesting. It's not. I've never completely been able to get my mind into it, but I do find it to be an interesting format for business.
Well, it's funny. I mean, it's funny when you get these companies because they sell an awful lot of sizzle, hoping the steak is soon to follow. So we have countless examples. And remember when Amazon was in its infancy, and the more they sold, the more they lost. And the old joke was, well, they'll make it up on volume. But everybody used to laugh at them, and every quarter, the results would come out and the results would disappoint. But they hung in there long enough. They built that infrastructure, and now they're just absolutely crushing it. Nobody's laughing at Amazon now. I think, you kind of saw it with Netflix, same thing. And they'd always look at, well, how many subscribers did they get this quarter? And it would disappoint, and Wall Street wouldn't like it. And, sooner or later, and definitely, aided by COVID from last year, the subscriber, it's just gone through the roof, and they've gotten to the point where they become profitable. Another prime example is more recently has been Tesla and some of the valuations on that, and rolling out a new technology or a new concept, and keep pushing it and selling that sizzle until the steak comes along. And they've got a market footprint. It's almost like the things they measure. And you'd always hear it about Facebook too when they were in their infancy, when they became public. It was always how many subscribers did they get this quarter, and as long as the subscribers were coming on board, they figured out a way to monetize that. I think Twitter kind of still struggles with their model as far as successfully being able to monetize it like Facebook has. So if they can hang in there long enough and keep Wall Street's interest long enough to get to the point where they can monetize it, I think things can take off for them.
Yeah, I agree completely. And yeah, it'll be kind of just exciting to see how all these big ideas and, companies turn into bigger things in our kind of everyday lives. All right. Do you have another article we can talk about, Jack?
I sure do. So, we've alluded to it and talked about it a little bit on this show, and, the infamous inflation. So where they're seeing it already really showing up is in housing construction, steel, copper, wood, lumber, all these things, the prices are going through the roof. And it was very interesting because just this morning I was watching an analyst who'd come on Bloomberg Business in the morning. And, it's funny because everybody's history goes back 10 years. So everybody's looking at this situation going, wow, we can print money, we can stimulate the economy, and it's not going to cause any inflation because, look at after the financial crisis. And the analyst brought up a very good point where he goes, you're not following the right model. People are only going back 10 years. And if you think about what this economy looked like, after the financial crisis, it wasn't an economy like it is today where consumers were flush with cash, where consumer credit and lending is actually down because people don't need the cash. There's a lot of money on the sidelines. The retail sales for the prior month were just blowout because, people are sitting on all this money. So he kind of talked about having a lot of indicators that were really the polar opposite. And so like going back to the financial crisis really isn't a good comparison. Like he said, he goes, we've never come out of a recession or a recovery into something like this where the consumer is so flush with cash, where there's so much dry powder. It would be almost impossible if we didn't start seeing inflation. So like I say, in this case, it's showing up in housing, but I think the analyst made some very good points to where, I'd be very shocked if this time through we didn't start seeing some inflation and start seeing it fast with all the stimulus and all the dry powder and all the pent up demand. And really, this is happening before we've reached full employment. When full employment comes back, there's just so much power. There's just so much behind an even bigger move, which obviously, like he said, these suppliers at some point are going to realize this isn't the recession. If you remember right, people were reticent to raise prices because it would kill demand. Well, I think you're going to see just the opposite with all this demand and all this stimulus and all this cash in hand. I think these people are going to, suppliers and producers are going to realize, hey, I can raise my prices, and people aren't going anywhere because they can afford the price increase. Kind of curious to see what you guys thought about, the inflation picture, what you see going on, and what's your analysis?
Well, I think it makes sense from a macroeconomic standpoint. I'm definitely not an economist, and I think, but I'm listening to the articles and the various folks weigh in who are saying similar things, that the cash available and the pinned up demand is a harbinger of inflation, and that and you just think about it, the common sense of it is, well, if goods and services are just in higher demand than can be supplied, people are wanting to buy more than is available, then that would cause suppliers to increase prices, and that is inflation. I think what's interesting is how we perceive or interpret the onset of inflation, because if consumers were doing well and had, I think there's an underpinning to this point that kind of casts a shadow on this whole thing, and that is that the reason why people are flush in cash, right? The unsaid piece of it is, people are flush in cash because of government stimulus, right? Because, if it weren't for government stimulus, if the economy was doing well and people were otherwise flush in cash and they were wanting to go on vacations and build homes and buy more stuff, and that demand was higher than supply, and that meant that companies could raise some prices, and that was a form of inflation. I mean, I think that all makes sense, right? You could have inflation in that scenario in which you feel kind of good about it, right? Because it's the sign of things going well. So I think the negative connotation on the fact that we may have some inflation happening is the subtext of the negativity to that idea is the fact that it's not necessarily being spurred on by fundamentals. It's being spurred on by just extra cash flow created by government stimulus. At least that's my perception, because I hear the talk of this inflation often coming in a fairly negative light, like, ooh, inflation's coming, watch out, this is going to be a big problem for us. And it's like, well, don't we feel that way because of we feel that way because of what we suspect the source of it is. But if the source was just generally good underlying, what we might think of as good underlying prosperity that was creating more demand for goods and services, would we still be scared of inflation, so to speak? Is kind of the way I think about that, or the question that comes to my mind.
Yeah, I'm with you. I think it's to be expected. I mean, we have more government aid happening right now than we did 10 years ago. And this is maybe just my personal opinion, but I think people are more likely to spend money today than they were 10 years ago. It just feels like the way that things tend to go. And so I think that when you influx that group with a bunch of money, you then result in this higher spending, and inflation can just keep raising prices, and people will, like you said, as long as they'll pay it, then it'll keep happening. And so I think it's as long as wages are raising with price increases, then I think inflation can be an okay thing. And so many of the things also come from, you talked about how copper had gone up quite a bit. I think the general demand for housing has gone up. And so I think everything relating to that is going to play into that. And so many raw materials are such big, factors in housing production that it just seems like that will continue to, anything core like that will continue to see those price increases. So yeah, it'll be interesting to see how it plays out. All right, everybody, that's going to do it for us. Thanks for watching and listening to the None of Our Businesses YouTube show and podcast. Please check out our sister podcast, Profitless on Purpose, where they discuss all issues in the nonprofit space. Thanks for watching and for listening, and tune in again next week for more business updates from an accountant's perspective. Thank you.
Thanks, everyone.